So first of all, some folks have been trying to push forward these kinds of financial markets for years, but it never happened. How did you make this work?
First of all, thank you so much for having me here, Emily. And yeah, so we get this question actually fairly often, and the answer isn't what most people expect. It's really about, we just had, I guess, more patience and more resilience, and we just push through longer. It's a regulatory process. It takes a long time. Innovation, especially in the derivative space, there's a lot of new things, new risks that we need to look to, and the regulators are looking for. And we were diligent to work with all of them for the CFTC. You can think about surveillance, customer protection, the contracts themselves, rules, a lot of different things that we had to work through and iterate through 2 years. And we really worked hard for 2 years and didn't give up to get it through the finish line and launch the exchange last year.
So, for example, the Fed has another decision coming up, and via Kalshi, you can make a bet on what you think the Fed will do. What are your markets showing about the Fed next move?
Yeah, I guess to backtrack and just explain a little bit how the markets work. So you can buy yes or no positions on whether the market something will happen or not, and the price goes from 0 to 1. Selling to 1 if the market is correct, if your position is correct. And because the price is from 0 to 1, the price, so like, for example, 60 cents means there's a 60% chance something will happen. So you can really directly translate the price to the probability. If you say that price is truth. With the Fed markets, we have different markets for every FOMC meeting. So for 25, 50, or 75 basis points hikes, our markets are saying that for the June FOMC meeting, we'll be seeing a 50 basis point hike with 95% chance. The markets are also saying that the July meeting will see another 50 basis points hike with 90% chance. And across the whole year, the markets are expecting 10 Fed hikes versus, I think a couple months ago, it was predicting around 7. So definitely a lot of hikes coming.
So President Biden just, unveiled this whole plan to keep inflation down. What do your markets say inflation's actually going to do?
Right. We also have markets on inflation from 0% to 1.2 in every month of the year. The markets are saying that the next inflation print coming out next week will be at around 0.65% month over month, or over the whole year, 8.2% inflation. Our actual markets have predicted 7 out of the 8 past inflation prints correctly. So our traders have not been surprised at all to see the high inflation numbers. But it's important to say that for the rest of the year, so annualized for the rest of the year, the markets are expecting around 4% annualized, and December around 3%, which really is around normal level. So really expecting inflation to go back to normal.
Now, regulators initially said no to an exchange like this, but recently changed course. Isn't this gambling? Why should this be legal?
That is a great question. We are an exchange the same way that CME or the New York Stock Exchange are exchanges. And you trade events on our exchange the same way you trade stocks or futures on CME or the New York Stock Exchange. We are basically just a trade matching engine that matches different people trying to take different positions. So if you take our Fed markets, for example, right? Our markets are a way to trade, hedge, or get exposure to Fed events, the same way interest rate swaps are designed to do, but ours are made in an exchange, in an accessible and simple way. We really think that bringing it to people have actual risks associated to this, like if you have a student loan tied to the 10-year Treasury, or if you're trying to refinance your home, you have real risk associated to the Fed raising rates, and you should have access to the same types of benefits that Wall Street does. This isn't gambling. This is finance at its best. It's about hedging risk and getting exposure to what you face risks in your everyday life.
Now, I'd love to learn a little more about your personal story. I know you're from Brazil and you studied Bolshoi ballet, which I assume was hours a day. How do you go from, potentially becoming a professional ballerina to going to MIT and launching a markets startup?
Well, that is a great question. I definitely have an unconventional path. So I used to be a professional ballerina. I used to train, as you said, 8 hours a day at the Bolshoi Ballet, and I worked professionally in Austria for a bit. And I think that really changed and marked how I am as a person. I think a lot of discipline and a lot of, sacrifice and looking to more longer term payouts versus very short term payouts, I think definitely helped with starting Kalshi. But I was always fascinated by math and science. So I went to MIT to study CS and math, and at the very beginning got fascinated by the finance world, history of markets, market structure. And from then it was worked at a couple of hedge funds, but I really wanted to make a mark of my own. So encountered the Kalshi problem, which for us really is people should have the same access, everyday businesses should have the same access that institutions have to hedge risks they have associated to events. Most trading is based on events. You think rates are going to go up, you do this in the stock market. We want to bring this to everyday people and let them do the same and have the same benefits. So yeah, definitely a convoluted story, but I think it all adds up in the end.
Last quick question. What's your position on crypto then? Isn't that, a market that's already pretty well established where you've got high risk, high reward? Why not put your money in crypto instead?
That is a great question. I think crypto has wiped out a lot of people in the past couple months. You can take the Luna example. I think that it needs more regulation. I think a very small portion of crypto markets are regulated nowadays, and you see a lot of scams just going around of easy 20% yield or something like that. And in the end, they just use your money, and it's really people's savings. There's actual victims to this. So I really think it needs more regulation, and it needs to be brought into the regulatory oversight in the US. I guess with us, as you said, it's you can also make money and lose money, but the difference is that we regulate it, that this won't be a systemic risk, that all the risks are explained to people. And regulation brings this fantastic thing, which is customer protection. And I think the crypto industry really should embrace and really needs that going forward.